Hello traders, what is going on? I hope you guys are doing all right. So we are currently ushering into the second week of December, and this is like the final chance for the market to give us the last hurrah for 2021. No doubt we saw the market retrace 2-3 weeks back, but Nimbus Capital overall is doing fine. We do have one trade set up on Sarin Tech, which hit the stop loss. But during that same period, we do have two big TPs on Marvel and Umbrella. So as of Monday closing, right? Yesterday closing, market does seems to be recovering, and at least for the strong uptrend counters like Apple, Home Depot, and Nvidia. So talking about Nvidia, this is the main topic for this video, and I'm sure you guys saw this Facebook post that I made recently where I kind of mentioned that if Nvidia breaks out resistance, you should buy, or if Nvidia retrace, you should dollar cost average, or whatever happen, you should just keep buying Nvidia. But of course, I do mean it in like a half joking manner. Also, is that yes, I believe Nvidia is a good buy, but please do so with properly risk managed manner. Don't throw everything at once. Okay, please don't go and sell your house and sell your car and throw everything into Nvidia. Make sure you enter in small batches. So yeah, I want to talk a little bit more about Nvidia and why I made this particular Facebook post, why I believe this counter have more growth in the future. So let's take a quick overview first of what Nvidia has been doing for the 2021. So Nvidia have gained 130% year to date, or 164% at its all-time high. And now this gain is phenomenal, and congrats to those who managed to get the trade since the beginning of the year. So from its all-time high at 346, right? Nvidia retraced about 19% to the low of 281, and then it recovered on the same day back to 300, which was yesterday, Monday's movement. So now the movement like this, right, are the reason why I always discourage CFD and leverage on playing stocks, because stocks can actually swing 10-20% in a day. This is very common. If you look at Tesla during its crazy day, right, it can go up or go down by 20-25% in a single day. And imagine if you are leveraging like 10 times, 20 times on a counter like that, it means you are going to be facing about 100% to 200% price movement within a single day itself. And that is very dangerous. That is extremely dangerous. So if you are a CFD trader on this counter, right, even though the overall uptrend is still maintained, most trader will not be able to handle this kind of retrace, and they will usually get scared and then they immediately exit the market. So for example, if you look at Nvidia on Monday, a lot of CFD trader will definitely get kicked off from the trade because like, oh my god, support is broken, price is down by like 8%, and only to wake up on on today's morning to see, alamak, there's a big pin bar candle, I should have hold on. And the next time they hold on, they probably holding on to some downtrend counter and end up losing big also. So in in summary, leverage are very dangerous on stock. Okay, so enough of that. Let's go over some basic fundamentals. So right off the bat, right, when I look at the fundamental, what I like to see is if a particular company have skin in the future mega trends. So mega trends are life-changing technology which are very disruptive. So if you want to think about past mega trend, right, you can think mobile phone, you can think of digital camera, the internet, which is definitely a huge game changer. They are just life-changing technology lah. And if we look at the future mega trend that we can kind of like speculate, right, that will be things like self-driving car, the metaverse, augmented reality, electronics, sport, e-gaming, cloud computing. So all these are the future up and coming mega trend. And if you think about all those mega trend that I just mentioned, the self-driving car metaverse, right? You will realize that as a chip maker, Nvidia have exposure to all the mega trend that I have mentioned, because if you are making a self-driving car, you will definitely need the chip. Same thing for a metaverse or cloud computing, electronics for gaming. Gaming has been a huge revenue maker for Nvidia when they were like first started up, but now it is branching out. It is getting more exposure to all these big mega trends. So the growth potential is there for the future, and in fact, it is a very huge exposure. And I will also consider Apple as another company that has similar exposure to Nvidia as well. But of course, that is a topic for another day. So as a growth company, right, the exposure is extremely important, because if Nvidia is unable to maintain the growth, right, the share price can fall, because the share price have accounted for all these possible growth already. So let us explore this concept in detail. So if you consider the amount of profit that Nvidia is earning compared to its share price, it is not it's easy to say that Nvidia currently, as it is very overpriced compared to the earning per share. We can deduce that by simply looking at the PE ratio and compare Nvidia to its competitors such as AMD or TSM, Taiwan Semicon. So if we look at Nvidia, it has a PE ratio of 94.6. This is definitely a big red flag. Definitely a big red flag. The only other company that I believe has such a high PE ratio is Tesla. So Tesla have like 1,000 over. I mean, that one is like in a world of its own. But a PE ratio of close to 100 is definitely overpriced, no matter which industry you are in. And usually the high PE ratio industry are biotech and pharmaceutical company. I hardly see a semicon chip maker with such a high PE ratio. So if we compare to AMD, which has only 44.5 PE ratio, and TSM has the lowest PE ratio of 30.3. So just by this raw number alone, right, you can ask yourself, okay, like why put all the money into Nvidia? And since it is overpriced, at least AMD and TSM, they are much more aligned. They are kind of like fairly priced. So why not enter those two? So there are reasons. There are reasons. Okay, and one of the reason is, if we were to compare the gross margin, right? Gross margin is for every $1 revenue a company make, how much of the revenue can you retain as profit? So it's more like your profit margin, like that, your gross profit margin. Okay, so if we look at the gross profit margin, you will start to see why Nvidia has such a high PE ratio. It is because Nvidia has the highest gross profit margin among the three at 65.2%. Hence, this is one of the contribution factor for a higher PE ratio, because investors expect more growth from Nvidia compared to TSM and AMD. And we have to also consider the intangible aspect of Nvidia itself. And one of the most important one that has been going on recently is the acquisition of ARM, which can provide Nvidia with a very huge edge over its competitor. So the detail of the ARM acquisition itself, I don't think I am qualified to go through in detail, mainly because I don't have the in-depth knowledge of what is going on, but I do know that it is one of the big thing that Nvidia have compared to its competitor. But for now, we are just looking at the basic fundamental aspect, the numbers. And also, speaking of growth, right? Given the price level that Nvidia is at right now, the market have probably priced in the future growth already. So you can think of it as like spending your bonus money even before the bonus come in, because you are confident that you will get this amount of bonus in this year. So stock markets is something like that. If the market thinks that this counter is very strong, it can continue its growth in the next year, right? It's not going to wait until the next year to simply buy up. The share is going to buy up now. It's going to price in all the future growth right now. Okay, so if I tell you that next year Singtel can go to $5, guarantee chop 100%. The Lee Hsien Loong whisper in my ear, next year he will pump Singtel to $5. Are you going to wait until next year to buy Singtel? No, you will go and buy right now, right? Yeah. So in a way, it's something like that, it's something like that. So it's important because number one, right? What the market is saying is, on the bright side, they have the confidence. They have the confidence that Nvidia is able to maintain or even beat the growth that they are experiencing right now. And the market is so confident that they are pricing in the future growth rate. So that's a good thing. But on the other hand, right, it is also risky in the sense that if Nvidia is unable to meet the expectation of the market next year, then even if Nvidia made profit, the price might fall because it is not as much profit as what the market expects. So that is why out there trading, right, especially during earning release, you will encounter a lot of situations where even though the profit is very good, this company makes this much profit compared to last year, but the price still drop. It is because the market expect more. And this can be a very big thing for Nvidia, because for Nvidia, the market does not just want profit. They want big profit that is able to beat the past year or the past year by maybe 50%, 60%. What they want is they want like a big growth, not just maintaining the profit. Okay. And of course, when we look at the quarterly revenue growth of Nvidia, you can see that it has been going up and up, and it's like a very nice upward slope that you are seeing right now. So we can see why the market is confident. And if I'm looking at this, I'm personally confident also. So next, I want to bring your attention to the debt as well. Nvidia has the highest debt and equity ratio at 0.50, and AMD or TSM doesn't even come close. For a growth company, right, debt is actually a good thing because it is used to fuel expansion, strategic acquisition, like in the case of Nvidia, right, the acquisition of ARM, and it is used to control market share. So as long as you have a healthy level of cash flow coming in, as long as you have enough cash to repay the current debt that is due in like the next 1 year or 2 year, right? It is a good thing. And we can see that Nvidia cash flow is very strong, and they even though they are holding debt, right? Their debt is at a healthy level that they can still repay. They have a lot of cash. Not only they have enough cash on hand, right, they also have strong cash flow. So if you are in such a strong position, right, it is advantageous for you to take on debt to fuel your growth even further. And that is what Nvidia is doing. And we don't see that in AMD or TSM, which is why the market expect Nvidia to grow even higher compared to AMD and TSM. That's why the PE ratio of Nvidia is very high, because of the market confidence, because of market expectation. So from all these factors, right, we can see why Nvidia have a sky high share price and a absurdly high PE ratio. And in fact, it is justifiable. I find these numbers are justifiable based on what we are seeing right now. So let's move on to the technical aspect. So when we are dealing with technical, right, I always like to refer back to the pyramid. We always look at the trend first. After that, we look at the chart structure, and finally we look at the candle. So both AMD and Nvidia has a very strong and similar technical. So I'm only going to be going through Nvidia itself. But if we look at TSM, right, that is where TSM falls short, because even though TSM is in a strong uptrend, it has been quite stagnant for the entire of 2021. And in that same period, both Nvidia and AMD have grown like about 50%. I think AMD gained 50%, whereas Nvidia went up about 100 plus, which we just went through as we start this video lah. So TSM is like behind by a huge margin, and year to date, right, TSM is actually negative and it is in a sideways movement. So that is where, based on both fundamentals and the technical, right, I would say TSM is weakest among these three. And when we look at Nvidia, it is currently in a consolidation after the Q3 result release lah. And the Monday's candle, right, confirmed that we still have a strong demand support coming in at $280. However, right, even with the Monday's pin bar, the hammer candle coming in, it is still early to say that we have achieved a guaranteed support or we have achieved a higher low. We cannot jump into conclusion like this. It's still early for now. And the presence of the two extreme, right? The extreme high at 347 and the extreme low at 280, it signifies that there are still both seller and buyer interest within this consolidation range. Whenever it goes up, all the sellers are coming in, and whenever it goes down, all the buyers are coming in. So there is huge interest on both sides, and until both sides they manage to battle each other out and one side become the winner, right, most likely price is going to continue to consolidate for a while before it break out. Hence, if you are looking to buy within this consolidation zone, right, I would recommend that your stop loss is at least at 260, no higher. You cannot go any higher, mainly because we want our stop loss to be below this significant candle. This candle is significant because of the long, not just the long body, but also the volume itself. It signifies that this is where the majority of the buyer are starting to come in during the early November. And if price break below this level, right, then it does mean that the seller have won, the bear have won, and we want to be out of the trade ready. So stop loss have to be minimally at 260. And also ensure that you have some holding power. Just because you see a pin bar candle come in, it doesn't mean that price is immediately going to rally another 20-30%. It doesn't mean that, because once again, the extreme end on the resistance side, it does indicate that sellers are still present. So you have to be mentally prepared to hold. And this kind of knowledge and mental preparation, right, it does help you in the long run, because you go in knowing what to expect. If you are someone just going in with a 20 times leverage, put in your entire portfolio, and then if the counter gets stuck, right, you tend to get impatient, you don't know what to do, and you start making emotional decision rather than making informed decision. So knowing what to expect will help you a lot when you are trading. And given the current and the future potential growth rate, I believe that a target of 450 or even 500 is possible, but of course it doesn't mean that we can YOLO our entire capital into 20 times leverage. Do not do that. Please do not do that. We are civilized trader, okay? We are not barbarians. So to be able to profit and hold on to your trades, you need to have proper stop loss. You need to be stacking your winning trade correctly, and these are ways to manage your risk. Each time we add in a new position, right, we want to ensure that our old position is already locked with a profit so that we do not take unnecessary additional risk. And so far, Nimbus Capital have 2 open trades on Nvidia already. The first trade was way back in April, shortly before the stock split, as we have mentioned, and our second trade is in this September. And we will continue to stack all our winning trade as crucial price level are reached. So in our current case right now, we want to be able to break out from the resistance at 374. And once it break out, right, we will see what to do from there, and we will slowly add in more position as the price goes toward 450, 500, or even 600 before the pre-stock split price. We take it slowly. So trade safe, everyone, and stay safe also. So I hope this session provides some insight and some trading setup that you can work out.